how to manage capital exposure, aka risk, is going to be key to your long-term trading success. It's probably the most neglected area, and if you don't get it right, then you've already lost, especially if you're looking to win long-term. So if you like today's video, like, subscribe, hit the bell notification. Let's go into trade management, trade planning, and how to manage your money. We've got a chart of Solana. I've just backtracked the data. We don't need to worry about the setup. What we're saying here is we believe that the market is going to continue to the downside. We want to take a short trade, which is betting on the market moving down if the price goes below this point over here. And we want to have a stop loss up here. Now, what a stop loss is it lets you predefine your capital exposure. So how much should you risk per trade? Should it be half of your account, like 50%? Should it be 20%, 10%? Well, the best in the world is 2% or even 1%, depending on the size of your account. I wouldn't go higher than any more than 3%. If you go above 5%, it's going to be very difficult to win long term, because if you take a series of losses in a row, it's going to be very hard to recover, incredibly hard to recover. If you're risking 10% per trade, then you're just gambling. Anything above that, you're just going to blow your account. You've probably blown your account quite a few times. So I'm going to show you how to win long term. So what do we mean by a stop loss? So what we're saying effectively is if we get triggered into the trade and we're in the trade, but then the market goes against us and it just stops us out, right? That's just the nature and the business of trading. We have to make decisions. We don't have control over this. We just identify the edge and trade the edge. So this trade will be a loss, but we need to control this loss and we can predefine it. How do we predefine it? Well, let me show you. So I'm going to pull up a calculator, and it all depends on your size of your account, but we're going to work in percentages. So let's just say the size of your account is $10,000. Right? $10,000. Well, you want to risk no more. Well, you decide this, whether it's 1%, 2%, 3%. I definitely wouldn't go above 5%. But I like 2%. So let's just stick with 2%. So we multiply 2%, and that is $200. So we're risking $200. So that's the maximum we can risk, maximum we can lose, predefined. Now, again, if you got a $100,000 account, that's $1 million. We want one less. Times 2%. Well, the math is simple. It's $2,000 that you're risking. So the maximum you can lose is $2,000, and so on and so forth. So how does this work? Well, let's just unfold some of the data, because this is actually a trade that we took. Again, we're not going to go into the details of why it was a high probability trade. We're going to show you the trade management. So we've got triggered into the trade here. So at this point, let's just use the $100,000 example. 100,000 times 2%. The maximum we can now lose, we're exposed. We have to put some money down to find out if we're right. And that's the nature of the game. Now we don't have control over what the market's going to do. We've just identified the edge and we're trading the edge. And that's our job. Once we're triggered in, it's now about managing our position with trade expectations. So I'm going to show you exactly what we did. All right. So first, I cover this in a lot of detail in my training. But first, I put in, even before getting triggered into the trade expectations. Right. Very, very simple. I use something called Fibonacci ratios. We do an external retracement. And down here is my minimum expectation for the trade if it doesn't unfold. And I want to be on high alert if this price gets hit to exit some of my position and ideally move my stop loss to break even. Right? We're on capital preservation mode. So a lot of people make the mistake on totally focusing on profit. What you want to focus on initially is actually survival, capital preservation, and then growing your equity curve. But then once that happens, then the profit comes. So if you just trade perfectly with high probability. So I'm going to show you how we did this. And by the way, if you want to learn this in detail, we've got an amazing offer for Black Friday. It's Friday right now, right? We've got the whole course is £98.50. But the one that we're covering today, you get all of this. You get all the technicals, but it's this one here, entry to exit. So what we're covering today, I cover in immense detail. It's called a 2-unit trade strategy where you can minimize your risk and maximize your upside, and how to really do this in details with particular calculations. And to get your discount, make sure you enter the code BF2022. So this will come up. Let's see if it pops up. Here we go. And it's BF 2022. Click that, and we've got it already got discounted. You'll get it for £98.50, and then it's yours, one-time payment, lifetime access. So when we're looking at this trade, right, we're triggered into the trade. We don't need to rush. We got our minimum expectations, but we've accepted, and you need to accept that this can happen. And there will be times it does happen. It's just the nature of the game. But you've controlled your loss, 2%, right? 2% or whatever you've decided. But here, let's say $2,000 is our maximum loss. What's our upside? Well, 3x, 4x, 5x, sometimes 7x, 10x, 20x, if the trend really unfolds. So now let's just unfold the data more. So this is literally what happened. It just moved sideways for literally days, right? Days, it was hovering around. It wasn't in any immense profit. We just let the trend unfold until you have a reason, a logical reason to adjust your stop loss. So what we did is the market moved nicely in our direction, and now we're in decent profit. We've tagged our minimum expectation. So simply what you do here is half of your position move to break even, and then the other half of the position move to a swing high, and then the next swing high is over here. Now, what we're doing here, I like this strategy. This is pretty advanced, but really simple, because Leonardo da Vinci says it best. Simplicity is the ultimate sophistication. What we want to do is ask ourselves, what's the minimum that should occur if we're wrong? And then we want to be in the trade if we're right and the trend continues. So this particular trade, it didn't unfold that deeply. But what happened was the market moved a little further down. And what I saw over here was a nice 5-wave pattern, a 1, 2, 3, 4, 5. So with this stop loss here, with half of our position, I actually moved it all the way down to here. And we locked in some decent profit, right? Not life-changing, but it was decent. But the main thing right now at this moment in time is a risk-free trade. In other words, we're guaranteed profit, and the worst case scenario is we make some good money, decent money. Best case scenario is that the trend then really continues. So at this stage, it wouldn't be clear on what the market's going to do. Is it just going to do some type of correction, which happens quite a lot of the time, and then continue to the downside? And it's one of the reasons we had the second stop loss on half of the position up here. If the trend continues, then we would just trail this stop loss, trail it, and then lock in more and more profits. Now, with this particular trade, let's just see how it unfolded. It then moved and reversed and stopped out the second unit. So this is called high-level risk management. First, predefine how much you want to risk to find out if you're right. And I wouldn't go more than 2%. 3% is quite aggressive. 5% is really aggressive. And anything beyond that, you're just not going to survive, especially because, look, if you're risking 10% per trade and you get 5 losses in a row, that's more than half of your account, right? It's around half of your account plus, right? So you need to be aware of the downside, because everyone just looks at the upside. So capital preservation is going to be absolutely key to your long-term success. So now, with this particular trade, I'm just going to update it to where it is right now, because we're actually looking for a particular position with this. Let's just get rid of all of this. It looks like a trend reversal. And again, I'm just going to unfold the data. This is get it to where it is right now. This is where it is right now. Now, what I'm looking at here is we're going to identify the trade. So what I'm looking for here is that the market's move looks like some type of 1, 2, potential 3, 4, 5. I'm going to wait for a correction. More often than not, it will occur. And then I want a long trade setup. And if this occurs, well, guess what? Predefine my risk, 2%. So if I've got 100 grand in my account, there's 2 grand I'm risking to find out if I'm right. I want to get a tight entry where my entry is like this distance, and this would represent 2%. And if I do it like this, so you can see what we really are looking to achieve, because what you can achieve with 2%, which is minimum risk. But if the trend unfolds, let's just show you. I'm going to just show you how you should be thinking. So let's just do a bit of forecasting here. I'm just going to do this very quickly. Forecasting here. So this is not confirmed, but let's just say this turned out like this, right? Let's just say it turned out like this. And then we had some type of ABC correction, right? This is really, really common, ABC style correction. And we managed to enter the trade with these numbers over here, right? Well, what we would expect the trade to do if successful is something called 100% alternate price projection. By the way, I cover Fibonacci price in the training. This is the Fibonacci price type of the training. It's actually 5 courses in the 4 secrets, right? 5 courses. So it's Elliott wave, Fibonacci price, Fibonacci time, entry to exit. So what we're talking about today. And then also futures. And also, by the way, include my trade plan. My trade plan, which is I think it's a 13-page document with a checklist that just shows you exactly what you should be looking at to stack the odds in your favor and how to manage your money for long-term success, not overnight success. So what we're going to do here is what I would do is if this unfolds like so, again, it hasn't yet, I would put in some typical price movements based on crowd psychology, buying and selling behavior. And if it hits the minimum, we should anticipate, tells us here, a 6.9x. 6.9x. So we're risking, let's just make sure that that's clear, we're risking 2,000 to potentially make 6.9 times, which is 13,800, right? Hopefully that makes sense. But if it overextends to the next level, we're looking at around almost a 12x. So what are we looking for in terms of risk reward? Well, 2 grand risk. And if we've got a 12x, well, that's 24 grand. That's 24% of your entire account in one trade. Potential. So that's why you don't need to risk a lot to make a lot, especially if you've got a decent sized account. You know, I know sometimes it's a bit difficult if you've got a really small account, like under $1,000 or something, and you feel like you need to risk a lot to make decent money, but it's all around percentages, and you want to start as you mean to go on, because most traders, when they're beginning, will blow their account because they're risking too much. They don't have money management skills. No one's ever taught them. They're just looking for the big win, the big home run, but they're getting too aggressive because they're risking 20, 30, 40, 50% with leverage. Well, there's only going to be one outcome. Even if you won 3 trades in a row and your account is just doing really, really nice, it only takes one big loss especially if you haven't got a stop loss, to wipe you out, and then you have to start all over again. What's better, what the best do, if you want to be able to trade for decades, right? Decades. I've been trading over a decade. Why? Because of this right here. We stack the odds in our favor. We look for momentum, pattern, price, time, and then we have a high probability entry strategy, but then we need to do a trade management perspective. We have to have a plan and then trade the plan, which includes predefining your risk. And I would start with 2%, especially if you've got a big account. If you've got like 100 grand, 200 grand, a million, and thereabouts, you need to get really disciplined with that 2%. Smaller accounts, I would also, because in the future, you might get a bigger account from 1 grand to 10 grand, then eventually 20, 50, 100 grand. And if you've got bad practices and bad habits, it's really, really hard to change. So there you have it. So how do you succeed long term? You need to manage your risk, predefine your risk with acceptable capital exposure, and go for the 2% because you get some really good multiples if you can ride those trends. And keep in mind, by the way, because we haven't spoken about compounding, if the trend takes off, there might be multiple opportunities to add to the position once you're risk-free. So you can keep adding to the position until you reach the end of a trend. So in fact, let me show you this. I'll show you this one last thing. Again, you only need 20, 30, 40% of your trades to really be able to do these numbers. But if you start seeing, if this unfolds like so, and let's just say you manage to enter a tight entry over here, and you manage to get risk-free when the price was over here, well, you can add to your position over here. And then let's just say you're locking in some serious profits over here. Well, then you can add to your position on a wave 4 and then look to exit the full position at the end of a wave 5, right? And that's the whole name of the game. And then all of a sudden, you can make 10, 20, 30, 40, 50% of your whole account on one particular trade. That's why it's really important to be consistent. Even if you took a loss, be consistent with the next one. Risk 2% to find out if you're right. If the high probability edge is there, if you've got the strong hand, you need to play the bet. Place the bet, 2%, and then it only takes 1, 2, 3 out of 10 trades, and then all of a sudden you make a big chunk of change, which is great, and then it's just rinse and repeat, rinse and repeat, rinse and repeat. So if you want to take your trading to the next level, take my 4 secrets. You'll get my 4 secrets course. Is literally all inclusive, lifetime access, one payment, £98.50 is ridiculous. It's ridiculous. Like £4,000 of value over here. And when you read this page of how much work, my 15 years, blood, sweat, and tears have gone into this, you're going to get it at a super discount, but use the discount code BF2022. It's available until this counter goes to zero. Take advantage of it whilst it's still available. Right, let's finish on the quote of the day from my book. Let's go with, not really a quote from my book. Let's go, actually, we'll go with chapter 5. We'll go with chapter 5. Chapter 5 is Leonardo da Vinci. And he says, simplicity is the ultimate sophistication. Simplicity is the ultimate sophistication. Identify your edge, trade the edge. Think of it as you're playing blackjack or poker. You got a good hand, you got a strong hand, you play the probabilities, and you just keep risking 2% to find out if you're right. Even if you get stopped out, your last 3 trades and you lost 2%, 2%, 2%, hey, guess what? The next setup is independent from the previous 3. So you place it in the same manner. That is not necessarily easy because emotionally you may feel a certain way, but that's where it becomes professional, or you need to become a professional where it's independent, because people get caught up with the last few performances, including if you had last 3 were winners. A big mistake that traders make is often win 2% and you've made, let's say 6 to 8% or 10%, and then you win again, and then you win again, and then you might think, if I only risked 5%, if I only risked 10%, if I only risked 20%, I would have been ready to retire. Well, guess what? That's how you blow your account. No, just think 100 trades, just keep going, consistent. Plan your trades and trade your plan. And there you have it. Now you have the secret, how to manage your money to succeed long term.